the best investing books all tell you, just buy these American ETFs. But let me show you what happens when I try to do that here in Europe. I go to my brokerage, I put in the symbol, look up the ETF, and trading restricted. US ETFs are banned here in Europe because of EU regulations, which honestly are moronic. And I say this as a European myself. I've been a professional investor for 17 years. And there are 4 ways to buy these banned US ETFs, which I discovered while investing hundreds of millions of euros. But I gotta warn you, these ways range from completely safe to one crazy loophole, which is potentially toxic. First up, we have the twin method. So SPY and VOO are 2 ETFs that invest in the S&P 500 index. That means that when you buy one of these funds, your money gets invested in 500 of the biggest American companies. But the S&P 500 is actually just a list of companies. Anybody can invest in the S&P 500. Any fund manager anywhere in the world can set up a new S&P 500 ETF. And you can actually find European twins to these big popular ETFs, which are based in Ireland or Luxembourg, and which are available to us here in Europe. Now, the reason everybody talks about SPY and VOO is because these are big American funds. So American YouTubers, American books naturally tell you about these funds. But if you live in Europe, all you need to do is find the European twins. And to find these twins, what we're gonna do is go to justetf.com. There are around 3,000 different ETFs to choose from. Now, how do you find an equivalent for SPY or VOO? So these are S&P 500 ETFs. Well, I would go here to matching indices and simply look up the S&P 500. So I click here and I see that there are 24 different ETFs available. So we have a lot of choice. Now, how do I choose between them? Well, the first thing I would do is I would click here on TER, that's total expense ratio, and check out which of these funds are the cheapest. So for example, we see the SPDR S&P 500 UCITS ETF accumulating and distributing. These are different versions of the same fund, which have a total expense ratio of 0.03% per year. So that means that this fund will only charge you 0.03% of your investment in fees every year, which is really, really attractive. By contrast, SPY will charge you 0.09% per year. And if we look up VOO, that's going to charge you the same 0.03% per year. Okay, so these European twins are actually quite attractive. So should you just go ahead and buy the cheapest ETF you find? Well, not so fast. In Europe, there are a few other nuances to consider. If we go down here on the left-hand side, we see use of profit. In this section, you can choose between accumulating and distributing ETFs. So a distributing ETF is an ETF which pays out dividends when it receives them from the companies where the ETF invests. An accumulating ETF takes the dividends and reinvests them inside the fund. I have a separate video about this topic, but the short answer is in most European countries, you get better results with accumulating funds. The exceptions are the UK, Switzerland, Austria, Denmark, and maybe a few other countries. But for now, I'm going to assume we want accumulating ETFs, so that leaves us with 13 funds to choose from. And then the other thing that you can look at is what's called replication method, where you have what's called full replication or swap-based replication. Full replication is the easiest to understand. It just means that when you buy one of these ETFs which are fully replicated, your money gets invested in 500 of the biggest American shares. Swap-based replication is quite a bit more complicated, but here's something interesting. When we click here on 1 year in percent, that's going to show us which funds have been the most profitable. Now, in theory, these are all S&P 500 ETFs. You would expect them to have the same results. But actually, when you click here, you see that the most profitable funds earned 33.5% over the past year, while the least profitable earned only 31.4%. And all of the most profitable funds have been swap-based. This is because of tax nuances where these swap-based ETFs don't pay US dividend taxes. So if you're looking for the most profitable S&P 500 ETFs, it's going to be these swap-based ETFs. But I personally prefer physically based ETFs because they are a little more reliable, a little simpler to understand. By the way, if you live in Europe and want to start investing in ETFs, I've got a cool free Zoom workshop that you might enjoy. The link is in the description. So now you know how to find twin ETFs for the SPY and VOO. That still leaves the QQQ, which invests in the NASDAQ 100. So let me just reset the search and look up the NASDAQ here. And that gives us 13 different ETFs to choose from. And you can follow the same process to select which ones you like the most. So that's twin ETFs, but this is only method 1 out of 4. So let's go on to number 2, which is the professional method. If you can prove to your brokerage that you qualify as a professional investor according to EU regulations, then you can buy any ETFs that you want. In order to do this, you have to meet 2 out of 3 criteria. 1, you need to have worked for at least 1 year in a professional investment-related position. 2, you need to have a portfolio of at least €500,000. Or 3, you need to do at least 10 major trades every 3 months. So that's like €10,000 at a time. So if you meet 2 out of 3, then a lot of these regulations and limitations don't apply to you. This is why I personally could buy US-based ETFs if I wanted to. I have worked in the financial sector for many years. I meet the minimum portfolio size, so I could buy US ETFs, but I don't. And it's because of a tax reason that I will explain in a moment. Now we get to method number 3, the airplane method. If you live in a European country which is not inside the EU or the UK, then you can also buy US-based ETFs. For example, investors in Switzerland or Norway or Ukraine have no issue with this, which might lead you to a natural question. Why not us in the EU? I mean, Switzerland isn't exactly known as a lawless place. Swiss regulators protect investors. So if it's safe for Swiss investors to buy US ETFs, why not for those of us in the EU? Well, it comes down to the genius of EU regulators. You see, EU regulations require an ETF to give you a certain kind of key information document, which includes some predictions of what future results could look like. American ETFs are not allowed to make any future predictions because of American laws. So American ETFs simply cannot meet these EU requirements. Now, if that makes sense to you, make sure to comment down below and explain why. And now we come to the 4th method, the loophole method. And this one is a bit crazy. It's potentially toxic. I call it a loophole because it takes you around this EU restriction on US-based ETFs. And to use this method, you need options. Now, an option is a financial instrument which gives you the right, but not the obligation, to buy or sell a certain stock or ETF in the future. And options are probably the most dangerous instruments in finance. If you don't know what you're doing with options, you can lose not just the money you put in, but all your money and go bankrupt quite quickly. So please be careful. For most people, twin ETFs are a much better solution. That said, here's how this works. If you buy a call option on an S&P 500 ETF like SPY, it gives you the right to buy this underlying ETF in the future, for example, over the next month. Now, you don't have to buy this ETF, but you have the right to buy it at a certain price. Buying this ETF directly would not be allowed by your brokerage, but it is perfectly fine to buy this kind of option and then to exercise this option. Meaning you tell the brokerage, I want to use this option, and whoever sold you the option now has to sell you the S&P 500 ETF. So to me, this is kind of ridiculous. The European Union doesn't allow us to buy perfectly safe, perfectly reasonable American ETFs, but this loophole is allowed, and people can play with these dangerous options and get the same result. But that is how it works. And to be fair, if you follow instructions carefully and just buy a call option on an S&P 500 ETF, what you are risking is limited. You cannot go bankrupt. The most you can lose is your investment. But the risk with options is that you might make a mistake. So for example, if instead of buying a call option, you sell a call option, then you are basically promising to sell somebody a certain ETF at a certain price whenever they want to in the future. So for example, if you sell me a call option of a stock at a strike price of $100, it means that at any time in the future, I can demand, sell me that stock right now for $100. And if that stock goes up in price to $1,000, you have to go out there and buy the stock and sell it to me at a huge loss. But right now, just for entertainment purposes, let me show you what the process actually looks like. So let's buy some of these banned US ETFs using a call option. Our first task is to decide which ETF we are buying. I would like to buy SPY, but let's check the latest price for SPY. It's around $600. That's kind of a problem because when you buy a call option, the minimum size is 1 contract which is 100 shares. So in that case, I would need to invest $60,000 in this ETF, and I'm not quite ready to do that. So I want to find a cheaper ETF. In this case, I'm going to use SPLG, which is another S&P 500 ETF with a really low total expense ratio, which has a cost of $71. So in this case, I need to invest at least $7,100 approximately. So here we see that the price of the ETF right now is $71.63, and I'm looking at an option with a strike price of $71. So that means when I buy this call option, I will have the right to buy this ETF at a price of $71. Of course, that is under the current market price, so I will pay a significant premium for this, in this case $1.40, just to buy this option. Now there's lots of nuances here. I'm not going to get into it. The premium is quite high because this option has a lot of what's called time value. The expiry is actually in several weeks, okay? Normally, you should do this kind of trick right before expiry so you're not overpaying for the time value, but I'm just doing it today to do a demonstration for this video, okay? So I look everything over, I double and triple check everything. I can actually go down here to the risk graph and make sure that my maximum risk is limited, okay? And once I've done all that, I'm gonna hit place order and confirm, and that's it. I've just purchased this option. And afterwards, once I've purchased it, this option shows up in my portfolio. So there's this little button E, which is for exercise. I'm gonna click on that, I'm gonna look everything over, and I'm gonna hit exercise. And that means that I just purchased the underlying 100 shares of this banned US ETF, and I ended up paying $7,105.68. So this is how that loophole works. Now, what are the drawbacks? Well, first of all, there's the risk of messing with options. Second, there is extra cost. I pay extra brokerage fees associated with the options. I'm also paying for this extra time value. So this is quite an expensive way to invest in ETFs. And the third drawback is that really in most cases, there's no need for this. The only situation in which this actually makes sense to me is US expats living in Europe, because US expats should not be buying European ETFs. That messes up their US taxes. So in that case, it can make sense to use this loophole. But for most European investors, this is simply unnecessary. Okay, but let me explain the reason why I personally don't buy these US ETFs, even though I could as a professional investor. There's something called the US estate tax. So if I owned more than $60,000 of a US ETF and then I died, the US government could take a significant chunk of my money before it got to my wife and my children. So unless you live in a country which has a great estate tax treaty with the US, and Switzerland would be the most famous example, buying these US ETFs is not the best for us European investors. It is much better to simply find a twin ETF and buy that instead. When you invest in ETFs here in Europe, there are many tax nuances like this, which can potentially save you a lot of time, money, and stress. So before you start investing in ETFs, make sure to check out this video where I explain ETF taxes in Europe.